Stay as an analysis in Zach's earnings outlook.
Another check on this fourth quarter earnings season with his point on a lot of different things. First of all, corporate continues to be strong as we speak here on Thursday. If I count, correct me if I'm wrong, about 60% of the companies in the S&P, at least, again, correct me if I'm wrong, more than 3/4 up in bottom line.
You're correct again.
Okay, so that's
care viewers with too many slides. We just have 4 today. So that's 64.4% of the index's total market cap. So a pretty sizable 2% is the revenue growth. 78 revenues, just to put these results in some sort of a historical, companies beating EPS and revenue estimates is up. We are comparing the results in Q4 with what we had seen members in Q3, the 4-quarter average. And yes, so we have 9.2% earnings growth. What that tells you, 9% came from revenue, the rest came from margin. So it's of top-line growth and margin gains that are giving Q4.
And is the good news still spread out over most sectors?
It's a very broad-based earnings momentum. You see underwhelming in the Q4 results for its own reason, and saw the broader corporate sector, industrial stand out, and the story is all across. So we don't have the more consumer-centric results yet, which would come from the retail sector in the coming days. But all in all, a very strong showing.
So, as you and I were talking before we started recording this, estimates continuing to rise. They're at a record high.
That's right.
What's driving that?
It's a very impressive showing. I think the key takeaway from the Q4 earnings season, and this is on top of all the strength that we pointed out already, is what you pointed out here, which is the trend on the revisions front. This slide shows that 2018 Q1 started off with expectation of a 9% earnings growth.
Yeah.
We are now standing at 15.5%. We have not seen this kind of momentum in the past. You asked for what's driving it. The tax cuts is the most obvious reason. It's a direct boost to the bottom line for a lot of these companies. But it's not just the tax cuts. We are seeing plenty of positive momentum, not as pronounced as what we are seeing in this slide, but still plenty of positive momentum on the revenue side as well. So the market is overall spooked by this interest rate fears that everybody's talking about. Now, higher interest rates are a boost to finance sector earnings.
Yeah.
And that's driving the earnings outlook for that sector. Tech has been strong and continues to be strong with or without the tax cuts. Okay. The energy sector is benefiting from what's happening with oil prices. So the tax cuts are a big reason, but there are other factors as well.
So what are you expecting for total Q4 growth?
You know, I have this slide that puts Q4 growth in a broader context relative to where we have come from and where we are expected to go. And you see that the 13.7% is the overall earnings growth for Q4. This would be the highest growth rate in many, many years. But as you could see in the coming quarters, growth is expected to accelerate. So overall earnings growth is expected to be 13.7. When all is said and done, I would think it'll probably reach 14%. Very strong showing on the growth front. And that's not the best we have to offer. Consensus estimates are indicating the momentum continuing into Q1 and the quarters coming after that.
And as the momentum continues going forward, again, a broad-based story, you think?
Very broad-based story. In fact, what was missing in Q4 was the relatively underwhelming growth and otherwise performance from the finance sector, and now we have finance playing its rightful role in the broader picture as well. So Q1 and beyond, we have all the other sectors that are producing strong results in Q4 as well. But going forward, we have finance as a good contributor to results as well.
All right, can we break out the small cap picture?
Yeah, that's interesting. Now, we know that the large cap earnings picture has been fairly strong for at least 4 or 5 quarters now. That's not the case on the small cap side. Small cap earnings were on the weak side in the last many quarters. In fact, over the last 4 to 6 quarters, more than half were in negative. So the Q4 earnings season is the first one where there is a major inflection and growth is coming up strong. So as a proxy for small cap, I'm using the S&P 600 index.
Okay.
And in there, we have results from 227 members, so not quite as further along on the reporting side as we are with the large caps. That's about a third of the index total members. 12.1% is the earnings growth. 10.1% is the revenue growth. 70% are beating EPS estimates, and a bigger proportion are beating revenue estimates.
Yeah.
So the proportion of companies beating estimates for the small caps typically is much lower than what we see for the large caps, but the fact that a bigger proportion are beating revenue estimates kind of reconfirms the trend that we are seeing with the large caps as well.
But this still is a good picture.
It's a very good picture. It's
Okay.
a very good picture and a major turnaround from what the small caps were showing over the last couple of years.
All right, thanks for that. Don't forget, in between our video chats here during earnings season, you can always rely on Shiraz to give you 2 commentaries a week on Zacks.com in written form. Mondays, he pens out the earnings preview to tell you what's coming up for the week. And later in the week, about Thursday, Friday, you'll see the earnings outlook, which is a trend piece. That's where you get all of his latest thinking when we're not doing these video chats with him. And with Shiraz, I'm Terry Ruffalo.